I worship you. I worship you. Alright, let us see. What are we doing today? Memento mori. There's that 12 hour. Alright. Well, good morning, everybody. Good morning, good morning. Thank you guys so much for joining. Today is December 31st, 2024, and I believe this is the very last day of the trading month. So let's see, yeah, we close on this monthly candle in about 7 hours or so. So that is something to look forward to. I'm making my tea right now. As I was saying, today we do close on the monthly candle. So with every single candle there is a TGIF, right? Or yeah, there is. It just depends on if it's large enough. If there is a large enough range for you to actually do a TGIF setup. Maybe it's not from that. Maybe from this swing high. Okay, so this swing high to that swing low. There's the TGIF monthly candle, and you guys will be able to see it here more clearly here on the 4 hour time frame. So this is a monthly candle, right? Every single candle has a open, low, high, close, or a open, high, low, close. Open, high, low, close. TGIF was taught to us by ICT that, or he used it, TGIF, more predominantly on the weekly time frame, right? He always told us that if we had expanded a lot during a week, you could expect some sort of retracement during Friday's trading because of the large expansion, right? So it's just literally, ICT is just saying this. There's always going to be an open. Prices is going to manipulate higher or manipulate lower or higher depending on the direction. And then we're going to expand, right? After we expand, we don't continuously expand. There's always some sort of retracement back inside that specific candle's range. And he taught us the TGIF setup on the weekly time frame. So Friday or Thursday, Friday is usually where we get some, that retracement. And let's just say that we retrace here on Friday and then bam, right? And TGIF is essentially when prices retraces back inside that blue shaded zone here, that 0.2 to 0.3. That level is usually where prices likes to close at if we expand a lot in a certain direction on a candle. And this applies to every single candle, right? 4 hour candle, every single 4 hour candle has a open, low, high, close. Every single 15-minute candle. Is the reason why he decides to introduce us to TGIF setup on the weekly candles is because there's enough time on the weekly time frame for movement and price, right? So notice how a weekly candle has more movement compared to a 4 hour candle. That is because we had more time to create the candle, right? So if we apply TGIF setup to the monthly time frame, so here's the monthly open. We manipulated, let's get this one. So here's the monthly open. We opened here. I believe we went lower. Oh, actually no, we went higher. and we went lower, and then we went a little bit higher, and then now we're back inside that range. So from this swing low, so from the monthly low to the monthly high, or the monthly high to monthly low, there is a dealing range, there is a candle range, right? And look at where we're at right now. We're within that 0.2 to 0.3 of the dealing range, right? Of that candle's range. So let me draw up the blue box. That is the 0.2 to 0.3, and let me do it on the actual candle itself too, so you guys can see it more visibly. Monthly candles high to monthly candles low. Notice what range we're within right now, and I believe we'll most likely close within this range as well. Look at that. We're right within that monthly candles 0.2 to 0.3 of that dealing range. So that's just something I do want to draw your attention to. Today is the last trading day of the year, so, and the yearly candle is about to come to a closure as well. So what do we do on this yearly candle? Let's apply TGIF setup to the yearly candle. Alright, so I already have this drawn up for you guys. So this monthly candle, or this yearly candle per se, we opened up here, manipulated lower, and we expanded a ton this year, right? Rather extremely bullish year. And look at where, so now after we create the high, after we expand, there's always going to be that pullback, that retracement back inside the candle's dealing range. And within that candle's dealing range, like I said before, we're most likely going to close within that 0.2 to 0.3 of that specific time frame's range. So in this case, we're probably most likely going to close within the 2138 380 level to the 2080-70 level. So just keep in mind the TGIF setup for the monthly time frame and the yearly time frame, because it is going, the monthly candle and the yearly candle are going to close today. And I'll explain this more tomorrow, but notice how this yearly candle is about to close, right? What can we anticipate for next year's yearly candle to do? Will we open up on the next year's candle and, you know, just drop lower, or are we going to manipulate lower, take out the yearly high? After we take out yearly high, I don't really care from I'm not too concerned, but my yearly buys coming into next year is going to be all-time highs. I do want to see us take out the yearly high, because am I anticipating some sort of immediate rebalance? No, I want to see us, you know, possibly open, manipulate lower, target, you know, tap back inside some sort of lower time frame, like a four month fair value gap or something like that, and then take out the yearly high. Based on the way this yearly candle got created, I can anticipate higher prices coming into next year, but that's for tomorrow. Let me go back onto the 4-hour time frame, because we are intraday traders. We do not swing trade, or I tend to not swing trade. But yeah, that's the, I guess that's the objective. That's the future onwards objective. The current objective, my daily buys coming into today, is for us to take out previous day low, it's either we take out previous day low or we consolidate. And what I mean by that is, notice how on this, so these candles right here, every single one of these candles are daily candles within this box, right? Every single one of those candles are daily candles. And notice how we closed here yesterday. This, with the way we closed here yesterday, I can anticipate for the next daily candle to take out the previous daily candle's low. Another confluence is that we closed, so we did end up creating a daily fair value gap. And notice how we created that daily fair value gap. We created that daily fair value gap by the third candle's closing price is below the second candle's low. So notice how that black line, and just take a look at the black line, and I'll make this line like red. Let's make it a little bit thicker here. Alright, so is the red line below the black line, or is it above the black line? In this case, the red line is below the black line, which means I'm going to treat this daily fair value gap as a fair value gap that gets left open. So I don't want to see prices rebalance this inefficiency. However, I do want to see us open on, like on this daily candle, I do want to see us open, you know, manipulate higher to take out previous day low. Or that's the first scenario. The second scenario is where we can open and then we consolidate and then we close. Like if we do really want to rebalance this inefficiency, today we'll close, if we want to do that, this daily candle, today's candle has to close above that black line, meaning I want to see us close back above this black line if we're going to consolidate and rebalance this inefficiency. But like I said before, today, because that red line is trading, or because the red line is below the black line, meaning that yesterday's close was below the second fair value gap's candles low. So a fair value gap gets created with 3 candles. Here's the first candle. Alright, so there's 1. So how many green lines are there that I'm drawing right now? There's 3 green lines, meaning there's 3 individual candles that create that fair value gap pattern. Alright, so that's my daily bias. My morning objective here is, so let's go into the 1 hour time frame. My morning objective is, depending on how we close here on this 8 hour time frame and this 4 hour time frame, will tell me if we're most likely going to attack the 4 hour low or the 8 hour and the 8 hour low. But based on how it looks like we're going to close this 4 hour candle and this 8 hour candle, they are suggesting that we're most likely going to take out that 4 hour low and 8 hour low. So notice how the 4 hour low here, that red line represents the 4 hour low, is the same. Oh, it's not the same. So this is actually okay, this is interesting because the 4 hour low is different than the 8 hour low. I can find some sort of model here because notice how the daily buys, I'm already bearish. I want to see us take out previous day low, but the current objective here for prices, at least in about 5 minutes, is to take out that red line, which is essentially the 4 hour low. But I need to find some sort of model for that. And we still have 5 minutes or so, so I'm going to wait until then. But for now, I'm going to log into my actual trading account and make sure that everything is working, functioning correctly. we have got to see a more bearish closure here if we're going to be on the side of the bears here. I like how there's SMT between Asia's lows and London lows, between ES and NQ. But if I'm going to be bearish, if I'm going to take a model, the 50-minute has to close more bearishly. We have got to have a more bearish closure here on the 50-minute for me to really take anything. So 50-minute has to have a bearish closure for me to really be eager to take anything here. But as of right now, I'm just going to wait and just watch. You know, I can have an objective, I can have a bias, but if I don't have a model that's present, then I just sit on my hands. Right? It's pretty simple. Today, coming into today at least, I drew up this blue line that indicates daily immediate rebalance, and we did have a daily immediate rebalance here. Same thing here on ES as well. We had the daily immediate rebalance, but notice how we closed in these daily candles, right? So yesterday we closed below the second fair value gaps candles low, meaning this daily fair value gap that we created here on ES should be treated as a breakaway gap, meaning I don't want to see us take out previous day high here. I want to see us take out previous day low on ES as well. So ES and Q, we have the same respective daily bias. ES is rather, yeah, we have to have a more bearish closure. Oh yeah, bye bye. We have to have a more bearish closure here on the 15-minute time frame for me to really want to take a trade, right? So even though my daily bias is the daily low, I'm not going to force that bias, right? So notice how there's no alignment yet. The 15-minute time frame isn't aligned with the daily bias, right? The 4-hour time frame isn't yet in alignment with the daily bias. So 4-hour time frame is not in alignment with the daily order flow here, but the 12-hour time frame at least. So notice how we created that 12-hour fair value gap here. This 12-hour fair value gap that we created here on NQ should be respected if we're going to follow the daily bias, right? So we have to respect this daily or this 12-hour fair value gap in order to take out previous day low. One confluence that I do have for lower prices is there isn't SMT between ES, NQ, or YM at 1220 low, right? So because there's no SMT, I can anticipate for at least one of those indices to take out the low, meaning I would still favor the bearish side because there's not SMT between the markets, right? A swing low and a swing high will always be accompanied by SMT. And in this case, there's no SMT yet between the indices, meaning I am still favoring bearish price action in the upcoming days. All right, let's see. I don't want to see it. I don't want to see that. So there's the 4 o'clock, or not say 4, I said 4-hour candle closure there, and we are now opening up on a new 4-hour candle and an 8-hour candle. So here, my morning objective, I'm not completely too convinced that we're bearish. Yeah, I don't know. I mean, we could end up taking out previous or 4-hour low, but I would have liked to just wait for more structure, but as of now, I'm not going to rely on the 4-hour time frame or the 8-hour time frame for bias. Maybe possibly I could rely on the 6-hour time frame for a bias, but as of right now, I'm just gonna sit on my hands and I'm gonna go over some positives and negatives here. But yeah, really not much to really anticipate here coming into this morning. No bias, and that's completely fine, because let's see on the 15-minute time frame. Yeah, 15-minute time frame. Very, very interesting. $15-minute time frame and the hourly and 30-minute isn't exactly suggesting for lower prices. It's just weird. But is it reasonable for us to be having this sort of price action? Yes. Why? Like I said, today is the last trading day, right, of the monthly candle. So can we anticipate, such price movement where we just attack the 1220 low? Nah, it's not efficient, right? Within this next, 7 hours or so till the monthly candle's closure, are you anticipating some sort of 500-point move? Not really. It's not efficient. And do we have any news for that? Not necessarily. However, so Tuesday, we don't really have any red folder news. No volatility for us to really be moving like that. However, Thursday, we could end up taking out, this daily low here, or possibly even this December 20th low. But today, if we consolidate today, that's completely fine, because that's reasonable. That wouldn't be something that I'm not anticipating. Yeah, but as of right now, this morning, no bias. No bias. It's completely fine. All right, let's go to trading journal. Yeah, hopefully I went over everything that I did want to go over here with you guys. So yeah, monthly candle does close. Previous day low is the objective. Watch out for the daily immediate rebalance. Okay, so I gave you guys my daily bias. I didn't give you guys exactly a morning objective, but like I said, if you're not clear about where prices wants to go, then you don't have to force anything, right? And that's exactly what I'm going to do here. I'm not going to force anything. I think that's going to be all as of right now. All right, so going into the pros and cons here from the week prior, some things that I do want to go over is that last week, the only trade I took last week, one of the things that I'm, extremely, it's like a goal. So of mine is that every single trade I take, I must be able to identify, I must be able to explain what the higher time frame or the flow is, right? I require a model, and I require some sort of entry pattern. And my entry pattern is going to be a fair value gap, right? So the trade I took last week, the daily bias coming into the trade last week was I wanted to see us rebalance this daily inefficiency, because notice how we closed here. This third candle, we closed below the second candle's high, and we created a bullish fair value gap. And because we closed below the second candle's high, I can anticipate for us to rebalance this inefficiency, meaning I can anticipate for us to take out the third candle's low. And after we take out or rebalance the inefficiency here, so notice previous day low was the daily bias, meaning the daily bias, like I said, was for us to take out that previous day low to rebalance the daily inefficiency. After we complete the daily's objective, I would have to go on to the lower time frames relative to the daily, right? So after trading on the daily or using the daily as a bias, what time frames do I have to go on, or can I go on for some sort of bias, right? Daily, you can go on to the 4 hour, the 6 hour, the 8 hour, and the 10 hour. There's it's like it's like almost like reading a book. You go from page 1 to page 2. If you go from the daily to the 1 minute, you're going from page 1 to page 50. You're skipping over a little bit of information that you're going to miss out on. So I went from the daily to the 6 hour time frame. In the 6 hour candle, we close every single 6 hour candle during a trading session, during the New York session at least. We have a new 6 hour candle that closes or opens up at 12 p.m. Eastern time. So when we close here at 12, or when we opened here at 12, we closed on a 6 hour candle. In this 6 hour candle here, the bias for this 6 hour candle, or the order flow for the next 6 hours at least, is for us to take out this 6 hour low. And notice how this hourly candle becomes my model, right? Because this hourly candle is already suggesting lower prices. So like this hourly candle, I'm anticipating for the hourly low to be taken, and this becomes my model, right? So 6 hour order flow is my higher time frame objective. My model ends up being on the hourly time frame. So daily, 6 hour, 1 hour. So I'm going from page 1, page 2, page 3, right? Notice how I didn't go from daily immediately to the 5 minute, and then on the 5 minute I go on to the 1 second. See, the correlation there is not, there's no correlation actually. There's actually no correlation. But here, daily, 6 hour, hourly. And then based on this hourly time frame, I notice, oh dude, the 15 minute, the 30 minute, and the hourly low, they have the same lows, right? Meaning this 15 minute time frame, or this 15 minute candle here, is also suggesting the same thing for us to continue lower right this instance, right? So because the 15 minute low is the same low as the hourly low, I can take my model now goes from the hourly to the 15 minute because they have the exact same low, right? And this idea is just, it's called scope, or it's an idea that I kind of thought up of. But because the 15 minute low is the same as the hourly low, I can treat this 15 minute candle almost like the hourly candle. Well, I'm not treating the 15 minute candle as a hourly candle, but I'm anticipating for the hourly objective to be completed within the next 15 minute time frame. So because I'm taking my model on the 15 minute time frame, I can go on to the 1 minute time frame, or the 2 minute, or the 3, or the 4, or the 5 for my entry pattern for some sort of fair value gap. And on the 1 minute time frame, there is this 1 minute fair value gap, and I wait. So we open up at 12, and we're not exactly trading below this fair value gap yet. So I wait until we get a candle closure below the 1 minute fair value gap. And notice this little comment here that I drew. That is when I entered that is when I entered this trade. So when we close below this 1 minute fair value gap, after we get another tap inside it, I take my entry. My stop loss is at the original fair value gap's high here, and I'm targeting the 50-minute low, which is the same low as the hourly low, right? So my model objective has been taken. But the question in this specific trade is, why else should we be continuing lower after taking out the hourly low or the 50-minute low? They're the same thing. Why else should we be continuing lower? 6-hour time frame. The 6-hour time frame is suggesting continuation of that lower price, right? So notice how the hourly low is completely different from the 6-hour low. That just means we should continue lower if we're going to maintain bearish price action. And in this case, after we take out the objective for my model, I move my stops to break even, and I let my runners run and hopefully take out the 6-hour low. But in this case, I after we take out the 50-minute low, I take some partials, I move stops to break even, and then I ended up getting stopped out at break even because we didn't end up taking out the 6-hour low. But that follows my trade plan, right? That's everything that I was looking for in that specific trade. So very, very that was a very, very good thing that I did. I guess it's one of the positives that I did from last week. Another positive here is, hey, look, we just ended up taking out the 4-hour low, and I believe we did end up taking out the 8-hour low as well. Oh, nice. Okay. So second thing here is that I stayed away from any trades on the indices when they are not in alignment with each other, right? So if ES and NQ are not in alignment with each other, meaning if ES is suggesting higher prices and NQ is suggesting lower prices, I would stay away from those conditions, right? Because the indices, they should always be trading in alignment with one another. NQ and ES should both be suggesting lower prices if we're in favorable conditions, right? If we're not, the conditions are not something that you want to be in, and it's just low probability. And you want to play in conditions where it favors you, or there's more probability that your setup or your strategy is going to play out. So for example, if the model here on NQ is suggesting higher prices, but the model on ES is suggesting lower prices, this leads to no trade, right? This leads to no trade conditions. So if this, then that is essentially what I'm trying to say. If the indices aren't in alignment, then this happens. Third point is that I am accepting the fact that I'm not in control of the direction of the markets. I am in control of, however, what type of strategy I implement, when I'm going to execute my strategy, how I'm going to execute on my strategy. And those are the things I can control. So I'm simply just an observer waiting for an opportunity to present itself. I'm not going to force an opportunity, right? If there's no, well, it's not essentially forcing an opportunity, but if your model doesn't present itself, then why should you be forcing something, right? And you shouldn't be forcing anything if there's no model present. Some negatives here is just maintaining complete focus, which is something that I have to carry out throughout everything I do this upcoming week. And there's that. So maintaining complete focus, giving the task at hand my entire being and energy. Improvements here, so taking consistent models. So if I can break down every single trade that I take this week, just like how I did with previous week's trade, then I would have accomplished this first I guess checklist. Every single trade I take, I must be able to explain what the higher time frame order flow is, and the question to kind of make that concept a little bit easier is, why else should prices continue higher or lower after completing the lower time frame model? Being able to identify a model and displacement, those are the three things that I look for: displacement, a model, and understanding higher time frame order flow, and aligning my model with the higher time frame order flow. Second, checking for SMT, staying away from unfavorable conditions. If NQ and ES are trading inversely, meaning if they're trading opposite to each other, then you don't want to be a part of those conditions. Continue to practice patience. If there's no trade, that is completely fine. And complete focus, right, on everything at hand. I do not require so there's this idea that it's an idea or a concept that everybody knows, but it's like in the back of their heads, and it's the idea of external validations, right? This dude on YouTube was talking about how let's think of two goals here, right? The first goal, so let's say you're a social media influencer or something like that, and you post a lot of social media content, and one social media influencer, one of their goals is to have, let's just say, 10,000 subscribers or 10,000 followers, right? And let's say there's another social media influencer, and their goal is to post 50 posts or 50 pictures or whatever in a time frame of a week, or post daily. So that's two types of goals, right? So the first one being 10,000 followers, and the other one being 50 posts a week, and let's just say you post 10 times during the weekday, so 10 posts per day / weekday, right? So which one of these goals here require another person's not validation, but requires another person's assistance for you to even be able to accomplish one of those goals? It's this one, the first one, right? You require external you require something externally outside of you, something that you can't control, right? You can't control this, but you can control this. Doing that one step, like, right? Making that 50 posts a week, 10 posts a week. So there's two types of goals. This is an external goal. This is a internal goal. These are the goals that you want to have for yourself. I mean, it's not bad for you to have this external goal, but every single one of your goals shouldn't be an external goal. You do not require external or another person's being for you to be able to accomplish your goals. Have more of internal goals, and this is where you can really find peace from within, right? It's just one of those steps that you gotta take. What are things that you can control? And you can control this, but you can't control this. Doing this leads up to possibly this. And that kind of just goes with this idea here. Just practice patience, right? If there's no trade present, that's completely fine. That's out of your control. But a thing that you can control is knowing when to sit in your hands, carrying out and executing your strategy, and when to not execute your strategy. That's something that you can control. All right, and I think that wraps it up for the positives and negatives. Going on to, I do want to post a daily quote. I didn't do one yesterday because I didn't do a live stream yesterday, and there's reasons for that, but there's no excuses. Today's quote is going to be up to ChatGPT here. ChatGPT, can you give me daily quote based on this story, Vagabond manga following the life of Miyamoto Musashi. Dang, I don't want to mess up his name. There we go. To walk the path of the sword is to battle not only enemies but fears and doubts within. Strength is born from solitude, but wisdom comes from knowing when to embrace the world. Like Musashi we must sharpen our will and wield our purpose with clarity, forging our destiny stroke by stroke, step by step. Can you give a The way of the sword is the way of the self. A true warrior sharpens both blade and spirit. The way of the sword. Okay, I guess you're just giving a different quote for today. The way of the sword is the way of the self. Meaning, in Vagabond, Musashi's journey with the sword parallels his journey of self-discovery. This line emphasizes that mastery of an external skill, like swordsmanship, is ultimately a reflection of mastering oneself. The challenges faced, so this, I find this very relevant because for me to master the external trait of trading, right, I must have, there's a lot of reflection that goes within myself when I'm trying to master that external skill. So this is very relevant to me, at least. The challenges faced in trading, combat, and life mirrors inner struggles such as fear, doubt, and ego. This quote right here is extremely relevant. Whether you're pursuing a skill, financial freedom, or personal growth, remember that every external challenge is also a chance to refine your character. A true warrior sharpens both blade and spirit, meaning a warrior is not just defined by physical strength, technical technical prowess, but also by inner discipline, wisdom, resilience. In Vagabond, Musashi often realizes that brute strength alone is insufficient. It's the cultivation of his mind and spirit that allows him to achieve greatness. Application, balance external goals, mastering programming, financial growth with inner work, mindfulness, emotional intelligence. Both are necessary for true mastery. Reflection. This quote captures the duality of growth, external skill, and internal transformation. For you, pursuing financial freedom or personal development means sharpening your blade, while also strengthening your spirit, values, and mindset. Like Musashi, view each obstacle as an opportunity to become not just better at what you do, but also better at who you are. That was very, very good. So that's going to be our quote for today. Hopefully that resonates with you guys. And me just put that into chat here. All right. So that's today's quote. And let me just, I like doing this with ChatGPT where I say thank you. Please continue the good work. And there we go. Okay, so that's basically going to wrap it all for today's live stream. Let's do a little recap. So, like I said before, daily time frame, I am anticipating lower prices, but it's reasonable for us to consolidate. Keeping in mind of the monthly closure and the yearly candles closure as well. It's okay for us to consolidate today, but if we do see lower prices, I'd want to see us take out previous day low, morning objective or intraday bias here. At least I do not have a bias anymore. 4-hour low, 8-hour low has been taken, so it is up to now the 6-hour time frame for an intraday bias, right? So this 6-hour candle is going to close in about 1 hour and 30 minutes, which whenever we close here on this 6-hour candle, we have a possibility of another objective, right? So with every single candle's closure, we get an objective. If we close bullish here on the 6-hour candle, then I would like to see higher prices and maybe a rebalance of this 6-hour fair value gap. If not, if we see a bearish candle closure and it's really heavy, then I would like to see us take out the 6-hour low and then possibly previous day low. But I mean, we have 1 hour and 30 minutes to do that. I'm not going to attempt to try to guess the future, but yeah, happy New Year's, and I will most likely be on stream tomorrow unless I'm going to church. But yeah. Oh no, markets are closed tomorrow. I forgot. Bank holiday. Until next time. Peace out.